So let's talk about Robinhood, because Robinhood really mirrored Apex in their margin requirement. As you can see here, is this something you've seen before or no?
Yeah.
Is this like, because I posted this, man, I posted this like 8 times throughout the year. And the problem with this is when you post this as super stock, people think it's an AMC push, and it's not. It's just the facts. The fact is that 15% was all stocks on Robinhood's initial margin the 1.3 billion when he first woke up, when Vlad first woke up. The 1.3 billion was 200 million of all other symbols. Then you have GameStop, which was at 250 million, which is an incredible amount. And then you have AMC Theaters at 850 million. Portal, the largest components of the company's collateral deposit requirement, was a value at risk charge of approximately 1.3 billion, as well as the excess capital premium charge of 2.2 billion, which Robinhood had not calculated. Robinhood calculated that of the 1.3 billion value at risk charge, approximately 850 million was attributed to AMC, and approximately 250 million was attributed to GME. Now, if you take the 1.3 and you split it up, that's how you get the 200 million in
Why
other
was
symbols.
AMC so much higher?
Thank you. And let me bring up the post. Thank you for saying that. Why the hell was AMC so much higher, right? Okay. So, the title is very important here. Absent movie stock, Robinhood's collateral requirement is 450 million on January 28th, 2021, instead of 3.7 billion. That's 250 million under what Robinhood already had on deposit at the DTCC. No defaulting ECP charge, no PCO for GME. Instead, AMC, which is popcorn, AMC defaulted Robinhood, who froze both stocks. And then trade 385 is what I want to talk to you about there. But so the point is this, why this was it was more highly upvoted in the other one. This was on a repost kind of. But under risk mitigation efforts, if Robinhood is looking at this VAR charge and they see $850 million for AMC only, which stock are you going to a PCO?
Well, AMC.
AMC. If you PCO only AMC, they have plenty of money to clear GameStop. Yet Robinhood not only PCO'd GME and AMC, they also restricted a ton of other stocks. So why would that even? There's a discrepancy there. The risk mitigation efforts were not in line with what the actual VAR charge show. So if they're 250 million under what they had already at the DTCC prior to them even putting up 700 million or getting the ECP waiver, because they wouldn't have gotten the ECP charge if they had just PCO'd AMC. Is that kind of making sense?
Yeah.
What I'm saying right now?
Yeah.
It's like, so how the hell did you come to the decision to PCO of the basket when AMC is such a drastic risk in your own portfolio of uncleared trades? It doesn't make sense.
Yeah, but why was AMC deemed to be so much more risky? Was there a lot more people buying AMC than GME?
That's why I almost got that's why everyone was saying it was a play. Now, if you add trade 385 with that, trade 385 is so important because it is the reason Apex Clearing. Do you know what trade 385 is?
No.
Okay. Apex Clearing did not have a reason to restrict any stocks because they made a clearing mistake. And the mistake is very, very understandable. And I'll show it to you right now. It was the gotcha post. You're seeing this, right?
Yeah.
Why Apex Clearing froze GME at hundreds of retail brokers, Webull, Sophie Ally, M1, Goldman Sachs, Marcus, Tastyworks, Public.com, all those. A market maker bought 23 million shares, right? 385 million. That's where trade 385 comes.
Mm-hmm.
A market maker bought 23 million shares and within the same second sold it on January 27th, 2021. That's the day before the buy freeze. Apex only logged the buy, not the sell, until 11 a.m. the very next day. So January 28th, 2021, when Apex Clearing froze GME and AMC and costs for 3 hours. When they logged the sell of the 23 million shares of AMC the next day, their ECP charge was wiped. So, but if the buy was only logged, then it skyrocketed volatility, fake spiked the VAR, and triggered the ECP. And the ECP was the excuse for why Apex Clearing PCO'd GME and AMC. And I have proof of this. And the proof is right here. And I want to show you. On the U.S. House Committee on Financial Services, on the morning of January 28th, prior to market open, Apex received its daily automated NSCC deposit requirements notice, which showed a collateral deficit of approximately 68.2 million, which is fine, well within the means of Apex to satisfy, and accordingly, this deposit notice did not elicit any non-routine reaction from Apex Clearing personnel. Now, however, at 10 a.m. Eastern, however, Apex accessed the NSCC's portal and viewed a slice, the 10 a.m. slice that showed a potential collateral deposit requirement that had increased exponentially from approximately $68.2 million to approximately $1 billion with a value at risk charge of $434.9 million. While the slice did not include information on a potential excess capital premium charge, Apex calculated that it would owe an excess capital premium charge of $562.4 million based upon the value at risk charge contained in their 10 a.m. slice. Okay, so this is just setting up. Okay, Apex is because Apex was the one clearing firm that morning that didn't receive a waiver. So that would be the first. You're seeing this, right?
Yeah,
Am I just
yeah.
talking?
Yeah. Keep going.
So the question everyone was asking about 2 years ago was like, okay, so you got Instinet, you've got Robinhood, you've got Wedbush, you've got LEK, you've got Axos, and they're all receiving excess capital premium waivers. Why the hell did Apex not receive an excess capital premium waiver? Well, this is why. Because right when they calculated that they were going to get an excess capital premium charge, they froze stocks. And so they got the hypothetical and they froze. Okay, so upon receiving the 10 a.m. slice, Apex personnel felt that it would be challenging for them to meet a discretionary intraday margin call at the vicinity of $1 billion within the normal 1 hour time frame. But upon receiving what appeared to be anomalous slice data, it quickly reached out to the NSCC to and confirmed that the numbers provided in Apex's portal were accurate. So they cleared it with the NSCC saying, hey, was this the right calculation? Which did not include the excess capital premium charge calculated internally by Apex. Senior Apex personnel, expecting trading activity to increase throughout the day and drive the requirements even higher, decided to impose the trading restrictions on AMC, GME, and costs. Apex reviewed the detailed NSCC files outlining its collateral charges and estimated that at the time that it imposed its restrictions, pending settlements for these three symbols accounted for approximately 90% of Apex's total potential NSCC deposit requirement. So 90% of Apex's requirement was like GME and AMC and costs.
Yeah.
So Apex's CEO, Bill Capuzzi, approved of the decision to impose trading restrictions prior to the distribution of the emergency notice via email that was sent to Apex's clients. I actually found how many clients Apex had in a merger that happened right after with North. They had 175 clients. So Apex had 175 retail brokers approximately 175 retail brokers that they froze buying for on January 28th, 2021. So when they put out this email to all their brokers that they weren't going to clear for AMC, GME, and costs, they restricted trading at 175 brokers. Crazy, right? So after they received another anomalous slice at 11 a.m. Eastern, which outlined a dramatically lower collateral requirement. So I remember where we're talking about 11 a.m., right? Mm-hmm. So at 11 a.m., their collateral requirement just lowered out of nowhere, right? Like, what the hell? Why did it lower? They're like, hey, man, we just got this massive spike. We got an ECP charge. We're gonna freeze all these stocks based on this calculation. We didn't get it yet. This was a hypothetical, and we're freezing in stocks based on this calculation. Why the hell did we get that calculation? And why the hell at 11 a.m. did it just go down out of nowhere? Based on the information in the 11 a.m. slice, Apex calculated that it would not be subject to an excess capital premium charge. Apex subsequently confirmed with the NSCC on a phone call that the lower amount was accurate. Okay, so they're like, all right, hold on. 11 a.m. I don't know where this lower amount came from, because everything in our books is showing everything's going up, up, up. Now here's the kicker. Apex later concluded an internal investigation and discovered what led to the elimination of its excess capital premium charge, as communicated in the 11 a.m. slice. Its internal review revealed an imbalance of trading activity in Apex's trading book from January 27, 2021, the day before, caused by a single large one-sided trade when a proprietary trading firm both sold and purchased approximately 385 million of AMC. The two trades occurred within less than a second of one another, but given the extreme volatility in AMC, the buy order went through. But the sell side of the trade required manual intervention because the price of the stock had changed so considerably in the fraction of a second between the buy and the sell order. Apex's overnight process for clearing trades require manual verification for trades that involve both a buy order and a sell order in rapid succession. If the spread between the buy and the sell order is greater than $10 net, this created a temporary imbalance in trading activity, i.e., a net buy position, which represents greater risk in a trading book and resulted in the NSCC assessing a heightened value at risk charge to Apex. Once Apex's operations team became aware of the need to manually acknowledge the sell side of the trade, they promptly approved the trade, acknowledging the acknowledgement at 11 a.m., like what we saw before. The acknowledgement eliminated the imbalance in trading activity, greatly lowering the company's value at risk charge, the VAR charge, which triggers the ECP, and eliminated the excess capital premium charge in the firm's internal calculations. Then, if you look at the footnotes are so important. This particular trade was from a proprietary trade. This is the trade on January 27th, 2021. The $385 million trade of AMC at 23 million shares. This particular trade was from a proprietary trading firm engaged in market-making activity who initiated a near simultaneously buy order and sell order of an equivalent amount, i.e. approximately 23 million shares of AMC Entertainment Holdings long and 23 million shares of AMC Holdings short. So that has been like huge on Reddit. And then I don't know if do you know Peruvian Bull?
Let's just yeah, I talked to him and I was he was on the show and the audio fucking corrupted after during the recording. I've no idea what happened. It just got completely ruined. OCB needed some sort of driver update and then just decided the audio encoding didn't want to work. But he's coming back on.
So but you know him, right?
Yeah.
He's like he's legit, right?
Okay.
So
sorry,
can I just? I'm like, hey, Peruvian.
can we
Well,
just go back
yeah,
one
you
second?
can. Yeah, talk. You're good. You're good. Go ahead.
So,
Sorry.
blah blah blah. 1
I
billion,
dominate. My bad.
1 billion charge put up to them, and then they were like, right, okay, well, maybe we need to restrict trading. And then an hour later,
Well, here's the issue.
when did they
The
restrict
issue
trading?
is,
Because they definitely did at some point. When did they?
yeah, no, they restricted trading for 3 hours on January 28th, 2021.
What time?
They restricted it during that time. I don't know, somewhere between 10 a.m. and 2. It's 3 hours in that. They opened back up at like 2.
Okay, so but even all right, okay, so
something
they
like that.
even though they knew that they didn't have to pay this excess risk charge, they still
No,
didn't.
here's the no, they did know. They didn't know. So here's the problem. Here is my assessment. And let me just share with you the proof, because I talked to Peruvian Bull about it, and I was like, hey man, this is what I'm thinking right now. And he came on and just posted one of the comments that I did on Reddit. Let me and this is the comment I do like about the whole that kind of summarizes everything. I'm better in writing, man. I know I speak a little garbled, but I'm way better in writing. Okay, can you see this?
Yeah.
Okay, so Peruvian posted this of that's where trade 385. So I was like, I'm gonna mark this as, I'm gonna call this trade 385. So
Yeah.
it's Apex Clearing's mishandling of the sell side of 2 equivalent proprietary trades by an unidentified market maker that occurred within the same second on January 27th, 2021. The buy trade was 350 million and the sell trade was 350 million. By logging only the buy but not the sell, the gigantic buy trade fake spiked the volatility, which has everything to do with the VAR, and the VAR giving Apex Clearing a defaulting calculation they used as the excuse for issuing an emergency PCO, buy freeze, directive for GME and movies is AMC, to the hundreds of retail brokers it clears for on January 28th, 2021. When Apex Clearing finally logged the $385 million sell trade after being stuck in overnight acknowledgement, it wiped away their defaulting calculation. And in other words, it wiped away Apex Clearing's excuse for freezing GME. So their entire reason for freezing the stocks on January 28th, 2021 was due to a clearing firm error. It's negligence. And it wasn't even brought up at any of the congressional hearings. First off, Apex Clearing wasn't mentioned once at the congressional hearings. So, I mean, going back to what we were saying, like, why the hell talk about just Robinhood?
Negligence. So it sounds
It's
like
negligence.
it sounds like someone knows how that system works, that with an order with a buy spread. Yeah, obviously speculation. Why?
That's speculation. That's speculation. I don't speak speculation. I can't. In just with the evidence given, this is negligence on a clearing firm at a high level. And I'm not saying that you're speculating, but that's what everyone does when they talk about trade 385. Yeah. They're like, oh my God,
it's Citadel.
Who was the DMM of AMC that day? Do you know?
No.
Citadel.
Yeah. Okay, well that makes sense.
Yeah. I mean, but here's the thing: there's a ton of market makers, so you can't just put Citadel in the center of it. So everyone's gonna go, "Oh, it's Citadel, it's Citadel." Like, all right, maybe, but there were a lot of market makers. But what the hell? So here's the question, and let me throw the memes on there, because these were the memes that you can see this, right? Okay, so bingo, here it is. Okay, so the question you have to ask is, who the hell was the proprietary, which you just asked. So I'm really glad you pinpointed, Josh. You pinpointed the exact question everyone's asking. Who the hell was the proprietary firm that traded that $385 million within the same second? And then what does a wash trade like that? What is the market making purpose there? Like, what is that? Well, I mean, like, it's under legitimate market making purposes. What? You pinpointed it at who was that proprietary market maker? Like, it feels like we should know if this was a negligent clearing issue. But again, you can't really put it on the market maker because he did do the sell and the buy and he did the wash trade. It was Apex's non-acknowledgement of that. Because I mean, if the hedge is so high, like it's like above $10,
Yeah, but what? Yeah, my question is like, okay, so it is negligence because the question is like, okay, so right, fair enough. There's this like thing that says you have to acknowledge like a large trade or buy sell, right? Okay, fine. I get that. Maybe that's like, maybe that's a good procedure to have in place. Why is it only one side of the trade? Like, because as a result, clearly we've seen it can cause like far-reaching consequences. Some guy sets up this like look at the dominoes falling here. So it starts with some guy failing to set this system up so that it like puts alarm bells on both sides of the trade, and then a guy sticks a banana up his ass. Are these two things connected? Someone goes on a live stream and eats an entire jar of mayonnaise. And it all began with this guy's
wild.
Yeah. But in seriousness,
it's wild.
Well,
here's the thing: we can't speculate. That's the one thing we can't do. So one thing we can't do as people who post and speak is we can't speculate. What we can do is
it's fun.
Yeah, well, something I can't speculate. But what we can do is we can say the congressional hearings were not well informed. They were negligent in their knowledge of what happened that day. They didn't. That gets us to Instinet.
Good news, everyone. My book about GameStop, the craziest story ever told, is now finished. Well, almost. Still waiting for the final draft. So, in the meantime, I think you should look at pre-ordering it or any one of the multiple fantastic, beautiful t-shirts that I have designed in order to sell with the book. Thank you, everyone, for your patience over the last few years while I have been finishing it very slowly. And I am really, really excited for people to read it. Link is in the description below. Enjoy the podcast.